Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top market events that have been moving the market since morning, and of course the other events we'll be expecting for the rest of the day, and of course we'll do a light touch on what to expect for the week. So we'll also be looking at some technical analysis, trying to understand the prevailing chart patterns, where the markets are and where they might be headed. And as usual, remember, this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So you can see already a good number already joined. Good morning, Paul Kerry, and shout out for being the person to join fast and comment. You can see Kevin's Jana in the house. Thank you for joining. And Smith FX. So already we have a question on board. Tomorrow is the D-Day for Trump tariffs. We'll check on that. Let's see Stephen Moore, Kim Emmanuel, good morning. Let's get things started. So from the economic calendar, as you can see, we didn't have much happening on Monday. It was quite a slow day. We didn't have a lot of major economic reports. However, as of this morning, we've had a very important key decision by the Reserve Bank of Australia, where the board members voted 6 versus 3 to hold interest rate steady at 3.85%, which was a surprise decision where on average the market expected a 25 basis point rate cut. So from 3.85%, we hold the same, no rate cut for now. And of course, this had an impact of strengthening the Australian dollar. So we'll be looking at how much and by how much movement we have seen the Australian dollar again against the US dollar, and we're trying to project where it might be headed next. So we also had the press conference, and now going forward for the rest of the day, the main event will be the Ivy League schools PMI from Canada. This will be at 5 p.m. where we're expecting the purchasing managers index to have slightly increased to 49.1, up from 48.9 in the prior reading. So as we go ahead for the week, we'll be looking at Chinese inflation data at 4:30 a.m. tomorrow, and then we get another interesting decision, in this case by the Reserve Bank of New Zealand, where in this case it's expected to hold interest rate steady at the current level of 3.25%. Then after that, we'll have, of course, another session hosted by Robert Mbogo, where he'll cover the main events of the day tomorrow at 11 a.m. Of course, later in the week, we'll be looking at the FOMC meeting minutes. There will be unemployment claims data, the UK GDP, and of course, the job market report from Canada at 3:30 p.m. So clearly quite a busy week compared to last week's shortened week. So on other news, trying to understand what happened as of this morning, you'll notice that the RBA's decision to hold interest rates at 3.85% was influenced by a couple of things. One, inflation has continued to moderate. It's moving as per the expectations of the Reserve Bank of Australia. And in this case, in the March quarter, headline inflation, which has partly been affected by temporary cost of living relief, was at the midpoint of the target range, while trimmed mean inflation was at 2.9%. The baseline forecast in May was for underlying inflation to continue to moderate to around the midpoint of the 2 to 3% range, with the cash rate assumed to follow a gradual easing path. So on the other hand, the outlook remains uncertain. Of course, the Reserve Bank of Australia is still concerned and doesn't know the end result of the Trump's tariffs. Of course, we expect that 9th of July, which is tomorrow, would be the deadline where Trump now issues fresh tariffs after freezing them for 90 days. But then a lot has changed since yesterday, which we'll be talking about next. So the key highlight as of this morning, stock market today, the Dow, SP 500 and Nasdaq futures stall as Trump amps up tariff pressure in sparred trade talks. So US stocks were muted on Tuesday after President Trump laid out stiff tariffs on imports in more than a dozen countries and delayed the return of sweeping April levies. So the Dow Jones hovered just below a flat line, while SP 500 nudged 0.1% higher, with the Nasdaq being up 0.2%. So on Monday, stocks fell as Trump posted on Truth Social letters addressed to readers of 14 countries, threatening 25 to 40% tariffs starting on the 1st of August. So key US trading partners, including Japan, South Korea, were among the group, as Malaysia, South Africa, and Indonesia also got served with their letters. So Trump signed an executive order on Monday, that is yesterday, officially moving his July 9 deadline for the resumption of Liberation Day tariff rates to August 1. So this means that the big news we were expecting to be happening tomorrow have now been adjusted by a further 3 weeks, and now we are looking at the 1st of August as the day that tariffs officially resume. So to answer one of the questions that has already been raised in the group, so the D-Day for Trump's tariffs has been moved from tomorrow to the 1st of August. So this gives markets some more leeway, and that may explain why we are seeing a positive performance on stocks. So you can see Kiama Muturi in the house, dear trader in the house, good morning, and welcome to the session. So for Trump's D-Day tariffs, it's no longer tomorrow. Now we are focusing on the deadline being the 1st of August, and that gives us some more room. So other than that, the president may send more letters in the coming days and weeks, a statement from the White House said. So in another response to a tariff letter, South Korea said it would kick trade negotiations with the US into a high gear, adding that it considered the new date an extension of a grace period. So other than on the trade, Wall Street expects a quiet week in terms of economic releases and earnings. Minutes from the Federal Reserve's June meeting land on Wednesday, and Delta Airlines kicks off earnings on Thursday. So oil falls as tariff ripples shake price. OPEC ramps up supply. Of course, this was expected. We expected 411,000 barrels to be added for a fourth consecutive time, which basically resumes the OPEC's total production before they started cutting 2 years ago. So other than that, there is also the issue of the EU, which is basically rushing to conclude framework trade deal with the US this week. So the European Union is seeking to conclude a preliminary trade with the US this week that would allow it to lock in a 10% tariff rate beyond an August 1 deadline as they negotiate a permanent agreement. So the EU is seeking exemption from the 10% rate for certain key products, including aircraft parts, as well as wines and spirits, according to people familiar with the matter. So some form of relief is expected as part of the agreement in principle. So the euro edged up as much as 0.3% in other Asia trading as traders reacted to a political report that said the US offered a deal that would keep the 10% baseline tariffs with exemptions for sensitive sectors like aircraft and spirits. Investors view the 10% as a more palatable level for trade duties compared with other counterparts, providing a boost to Europe's common currency. So, other than that, we have already seen the news about the Reserve Bank of Australia holding rates. So, Australia's central bank on Tuesday left its cash rate at 3.85%, a shock for markets that had confidently wagered on a cut, saying the majority of the board wanted to wait for more information to confirm inflation was slowing. So traders were quick to send the Australian dollar, racing up 0.8%, while 3-year bond futures extended earlier losses and fell 13 ticks to 96.58. So the swift moves in markets imply around an 85% chance the cash rate would be cut to 3.6% on its August 12 meeting, and now favors rates bottoming at 3.1% rather than 2.85% for the year. So with that in mind, I believe now we can check on the performance of currencies as of this morning. And of course, the Australian dollar leads with the gains after the Reserve Bank of Australia chose to hold rates steady at the current level, in this case gaining 0.78%. So New Zealand dollar was not far left behind, gained 0.48% against the dollar, and the euro was also pretty strong, up 0.41%. Canadian dollar 0.28%, GBP 0.23, and the Swiss franc 0.20, whereas the Japanese yen was the only one losing against the dollar since the market opened. So in the last month, the dollar and the yen have been the weakest currencies since the month started, whereas the euro and the Swiss franc have been the biggest gainers against the US dollar. So that being said, I believe it's now time that we move on and get into some technical analysis and try to understand the prevailing market conditions. So here we are. I'll be starting with looking at the dollar index. So just give me a sec. Yeah, so this is the dollar index, and as you can see so far, in the last 5 days, we can see that there has been a consistent move with the dollar gaining some of the lost grounds. So the consistent push higher has seen the market forming higher highs over the last couple of sessions, and today we are on a downswing right from the upper trend line towards the lower one. Though the dollar is still pretty weak in my books, currently trading at 97. In this case 96.1, so still a pretty weak dollar in the market. And as you can see from the majors, if it's, for instance, Euro USD, despite the dollar strengthening, it seems like the market is trading in a flag and we are getting right back to the previous highs. So in this case, you can see the consistent push as of this morning, with the euro looking even to retest the upper trend line here and potentially go for yesterday's high. So the current swing here is looking to retest this area here, and there seems to be some consistent strength in the euro against the dollar. So as for the pound, here you can see that there was a big drop last week. Market attempted to move lower and lower, but for 3 consecutive times it has been unable to hit a new low. So if you look at the 15 minutes chart, then you would understand the key difference here from the low here that we saw on Thursday, then on Friday, Monday, Wednesday, Thursday, and Monday. So all of these indicate some level of rejecting of lower prices. So now we're also looking at a potential turnaround point. Here was the highest price in the New York session as per yesterday. So pound USD hits that level and immediately starts pushing back downwards. So in this case, a key level to work with would be the session lows as of the Asian session. And in this case, a potential retest of this low for today. So for Euro USD, as you have seen, so potentially retesting this resistance here before making the next move. For AUDUSD, this has been the big mover as of this morning following the surprise rate hold by the Reserve Bank of Australia. So we have already tested what we would describe as yesterday's high. So market got to that area and immediately there was a rejection, and now the prices are ranging or moving sideways. However, in the long run, it seems more likely that the market will be looking to retest the previous high, which was all the way up at 0.65899. So from a daily time frame perspective, you can see that the long-term trend has been bullish, with the Australian dollar gaining some value against the US dollar. So from the H1 chart, after the big sell-off that we happened to see yesterday, the market has erased some of those losses and is looking to reclaim a previous high that we saw last week. So USDN, here we are looking at one market that has been really struggling to break above this area here. So notice the number of times the market has gone up to that area and failed to break, with only 2 instances, which led to a big sell-off immediately, and the market got back to the same area. So from the H1 chart, there was a really big struggle to break above this area here. And once the market got inside of there, it seems like we are trending in some form of range. So I would be more interested in seeing the market break out of this range that we entered since yesterday. So once we see a break of that, perhaps we'll have a direction. But for now, it seems more of a sideways momentum. So oil prices have regained and closed a gap that we saw some time back. So remember when there was a big sell-off after Iran and Israel agreed to a ceasefire, and there was a gap here, and the market attempted to close the gap and then traded sideways for a whole week. So last week we managed to break above that area and we went for this resistance, and then this week we crossed the gap again, and now we crossed the gap that we already saw 2 weeks ago. So since that happened, if you go to the 1 hour chart, you'll notice that after the strong rally that we saw in the markets yesterday, today it seems like the price is taking the opposite direction, which likely implies that we could be seeing oil prices dropping further back down, in this case with a target around $67.9 per barrel. So as for gold, the bullish momentum continues on the long term. This is on the daily. On the forward chart, it seems like we're in some form of flag, and on the 1 hour time frame, you can see that we just got to this upper trend line at midnight, and the market is now pushing further back downwards, which likely implies that we stay within pattern and the market goes towards yesterday's low around 3295.99. So on US equity side, we managed to break into a new high as of last week. This was on Thursday. Then on Friday, Friday and Monday, we had a big drop, but then today we are looking at signs of continuation. So good chance that we see the Nasdaq hitting a new all-time high again today, and this would mean breaching above yesterday's high and moving all the way to Thursday's high. So there seems to be some form of positive sentiment as of this morning. So I expect the bullish momentum to continue. And if you look at the SP 500, it's a bit of a similar thing. So a big sell-off yesterday, and today we are covering the same grounds. And of course, for the Dow Jones, big sell-off happened yesterday, and today seems like a path towards recovery. So on Bitcoin side, we still remain on this sideways momentum. So Bitcoin has just been moving sideways. So in this case, if you look at the most recent swing, this is where we had the market moving all the way up for like 2 weeks. We go to a major resistance area, and immediately the market showed some rejection of higher prices. So now we are looking at the market potentially pulling back with a mid target of around 106.389. So New Zealand USD also making a recovery against the earlier sell-off that we had seen yesterday. So in this case, potentially moving higher after breaking out of this triangle last week. So in this case, when you zoom out, you realize that this market could be going back to mean. So chances are that if this momentum continues, then we'll expect to see the New Zealand dollar trading at 0.606 back up to the breaking point from the triangle. So on the other hand, we have European equities making some good moves as of this morning. Starting with the German stock market index, already pushing to retest a high that we saw about 2 weeks ago, around 24,168. So from the daily time frame, you can see that this is way closer to a new all-time high. So we expect to see a continued momentum higher. And in this case, a key level test is this previous high. If you manage to breach it, then we could be on course to going for a new all-time high at 24,500. So for the Spanish stock market index, also the same thing. For the big sell-off that we saw yesterday, here we are seeing the market making a very strong recovery and potentially getting to the previous high. So our target for the day, if the momentum continues, would be the high that we saw yesterday. The Swiss stock market index seems to be the weakest, really showing some form of mixed signals. So if I was to clean the chart, then get back here, then you can see that this seems like the prevailing market pattern. In this case, indicative of a market that is moving sideways inside a triangle, and now we are on a swing downwards. So potentially we should be looking at the market getting to this particular trend line, and if the pattern holds, then we see the market moving back up. So French stock market index, market had opened with a gap, we just closed the gap. So we are still well within, I would say, the value areas around this particular trend line. So we should be observing for potential support along that line and the market bouncing from there. For the Netherlands, our stock market index also seems pretty weak as of this morning. Zoom out, you notice that the market is really attempting to break away towards the lower side. Notice after trading for a sideways momentum for our oil, eventually we had a break towards the lower side, and once the market got back in, we didn't get a new high. So as a result, here what is emerging is some form of trend moving downwards. In this case, you can see the complete bearish momentum from here, and with the EU potentially being slapped with tariffs, then we could be seeing the market retesting at previous key level support. So we are looking at a potential support around 905.33. So Norway stock market index still hasn't crossed this gap. So yes, we have really struggled to cross, but it seems positive that this week we might eventually cross that. So chart of the day would be the EU 50 or the Euro Stocks 50. Here we are seeing a market testing a key level resistance, an area it hasn't been able to break for a while. And now, if you look at the 15 minutes chart, you can see very strong entry by sellers. Of course, for the short run, we should be expecting to see some bearish momentum. In this case, looking at potentially market dropping to 53.15. That was the low of the New York session yesterday. So from the 1 hour time frame, this is how it looks like. So we should be expecting to see something similar here. So as for the Chinese equities, we are looking at the Hang Seng Index, in this case with a key level breakout here, which leads to an expectation that the market will extend this rally to potentially 24,431. And of course, we have the China A50 cash index. After a big sell-off yesterday, today we have recovered, erased all those losses. And then from the 4 hour time frame, this now more looks like a cup and handle formation, which likely indicates a continuation pattern. So we had a cup and a handle in a bigger time frame, and now on a shorter time frame, on the 1 hour time frame, you can see it playing out here. So which likely means an entire continuation pattern. So we should be expecting to see the China A50 index break this particular trend line and continue pushing higher. In this case, of course, as a book pattern, we first target the high of the pattern, which is 14,372 price action area. So that's it for the day. Checking to see the comment section if there's any questions. So does the Trump tariff threat on BRICS partners have anything to offer or just another paper trigger? This is a good question. The thing is, the threats by Trump's are no longer having the same impact they were having earlier. So in this case, a lot of investors have been betting on Trump always chickens out. So despite making big threats of Liberation Day on April 2, now we have been waiting for 3 months for July 9, and nothing happened. He just moved it to August 1. Then we know that he always chickens out. So investors have been ignoring him and focusing on other fundamentals in the market. So thank you everyone for joining. Thank you for liking and subscribing to the channel. And of course, those who have liked and shared the live on Twitter. Thank you to you guys. And of course, we have a new episode of the Bullish Banter episode coming up later in the week. So make sure to check it out. On 16th, we'll be having a financial literacy event at the USIU. So just trying to grab a quick link to this. So make sure to check out the latest episode from the Bullish Banter podcast. Is available on FX Pesa YouTube. You can also find it on all other podcast platforms. And of course, once you go through it, if you have any questions or feedback for us, make sure to share, and we'll be more than happy to discuss your key level feedbacks. So that's it for the day. Enjoy the rest of your trading day, and I wish you a happy trading week.